Capital gains tax is one of the reasons why a lot of homeowners have not sold their homes and why we don't have as many homes as we would normally have flooding the housing market, if you will. So if you don't know, when you own a home, capital gains tax is what you pay to the government on the increase in value of that property. So for example, let's say that you purchase a home for $200,000. You hold on to the home, and then later on down the road, let's just say that home is worth $500,000. That's a $300,000 increase. You pay the government taxes on that $300,000 increase. That's called capital gains tax. That's the gain or the increase in the value of your home from that $200,000 to that $500,000. So you're going to be paying the government a tax on that increase. And that tax can be heavy. It might be 25% that you might be paying the government on that capital gains tax. So if you think of 25% of 300,000, was that like $75,000, something like that? So, I mean, it could be a significant portion of your wealth that you're going to be handing over to the government just because your property increased in value. For no reason at all. Exactly. Just because your property increased in value.
You ain't got no control over that.
It's crazy to me that, you know, the government has their hands in so much stuff with, you know, your money and your finances. Is like, you make your check that you get paid, government takes their hand and gets their little piece first in taxes. You know, it's like taxes are I would say the biggest expense that most people don't even factor is taxes. I mean, you get taxed like 5 times on the same money. When you, for example, when you buy something, you pay sales tax. When you sell something, you know, you pay sales tax. When you sell something too, you know, you got to pay that tax for the increase that you received, rather, on the income that you receive, which is income tax. You got to pay tax on capital gains tax. So if you purchase property, you pay taxes on that. As you hold the property, if you sell the property, you got to pay the capital gains tax. You pay taxes on the thing that you hold, property tax. And then when you die, you pay death and estate tax. I mean, it's just so much that you get taxed on with everything. But no, talking here today just about capital gains tax, it is one of those things that is causing a lot of homeowners to not sell their homes, which is reducing how many homes we would normally have available for a sale in the market. And so one of the proposals that a lawmaker is trying to push is to 86 the capital gains tax, essentially, to get rid of that capital gains tax, or at least to modify it to a higher level, meaning that, you know, you can keep more of your money and the government doesn't get quite as much of it.
Yeah, the current thresholds now, the government actually established in 1997. So, you know, anything established in 1997, even a house would need updates, you know, since 1997, much more. Just with inflation being like how it has been, and the home prices having raised so much, it's definitely time for an adjustment.
Oh, absolutely.
I know when I sold my house last year, I made sure I told my tax guy, I was like, make sure I don't get no capital gains tax. Of course, my house increased. I sold it for about $105K more than what I bought it for within 6 years. And I was so worried about that capital gains tax. But reading this article, I realized that I was probably about, what, 150,000 under what it, you know, what the threshold would have been for me to even get it. But I don't know why I was thinking for some reason that it was 40%.
It might be closer to 40%. I mean, I honestly don't know. I just know it's a huge portion of your money that literally the government just feels entitled to for some reason. It's like, oh, you have that thing that you bought that's now worth a whole lot more. Okay, we want half. You know, it's like, we want a huge chunk of all of that money. It's like, why? You know, I've been paying you taxes on it this whole time, property taxes. You know, I've been paying, you pay so much in taxes to the government, but yeah, It's actually one of the reasons why a lot of investment properties that get purchased don't get sold. Is one of the reasons why they came up with the 1031 exchange. If you don't know what the 1031 exchange is, it's a vehicle through which you can defer paying capital gains tax when you purchase investment property. So let's say if you had that investment property, you're getting ready to sell it, and you're going to have to pay all this capital gains tax. Well, let's say if you were to sell that property, if you purchase another property that's equal use, like use, if it's investment, single family home or multifamily home or whatever, and you go and purchase another single family home or multifamily home, then that can allow you to defer having to pay those capital gains tax. Because if you had to pay it every time you sold a house, real estate investment would be little to nothing in this country. I mean, you wouldn't have anyone wanting to invest in real estate, because every time you purchase something, the government's going to hit you hard on any money that you would seek to make on it. So
every time I would see like those people that fix and flip homes, I feel like they're never really going to be able to escape the capital gains thing, especially if they're doing it like the article that we were reading said. It you have to be in the home 2 years in order to avoid it, or you have to have owned the home and actually lived in the home, I think. So if you have a portfolio of properties, let's say you have 3 properties that you're currently fixing and flipping, you're not living in any one of them, and you are selling them for more than $250,000 or $250,000 more than what you purchased it for, you're not going to be able to escape the capital gains tax. But this is for people who don't make a career out of it.
Yeah.
So,
and I would say that this has actually been one of the reasons that has more and more kept me from selling investment property. Is I'm like, oh, I'm gonna have to pay the government all this money, if I were to sell it. And what you see a lot of investors do instead to access that capital is they just borrow against it. And so rather than me selling the property, I'm gonna keep the property, and then I'm gonna just get a loan against it. And you don't pay taxes on a loan. So rather than me sell it and take, and I'm just throwing out numbers here, let's say if I were going to sell a property and I was going to take $200,000 in in gains from that property, but then I'm gonna have to turn around and give the government 80,000 of it, or however much of it. Rather than doing that, if I wanted to, it would leave me with 120,000. Rather than doing all of that, I just take the 120,000 in a loan out of my property, go do what I'm gonna do with it. I still own the property, and I get the 120,000, and I don't have to pay the government anything because it's a loan, and you don't pay taxes on the loan. As a matter of fact, any interest that I have on that loan, I can write off as an expense. So there are ways that investors have, circumnavigated having to pay those taxes and everything like that. And that's one of the ways, is that they just do a loan on the property they own rather than selling it. However, that does nothing to help you if you are looking to purchase a home, if you're in the market, because none of those homes are getting released to be available for people to purchase. They're just all being held because the government's going to tax so much, and nobody wants to pay the government money for anything, especially when it's as significant a amount as what they would have to pay. And you look at how much and this was mentioned in the article as well, how much the home prices have risen since 2020. With just that alone, a lot of people are, a third of home buyers or homeowners
be subject to it.
Exactly. A third of homeowners would now be subject to that capital gains tax. And this is for homes that you just own, that you live in, so
right. I think another thing, the article mentioned another way to circumvent some of the capital gains was the additions that you add on. Like if you added on an extra room, or you added another floor, or I don't know, building out a basement. Obviously, you can't add a basement on, but it said a new deck. Those qualify, like if you keep track of how much that costs, both labor and materials, you can actually take that out of what would be taxed as gain. Boy, and when I tell you, I would have a deck on every entrance, and those would be the most expensive deck, a $300,000 deck. Yeah, you know, we use wood that was imported from Cambodia, and how are they going to know?
Yeah, but and see, my thing is like, I don't want to. To me, it defeats the purpose if I have to spend money to save money. It's like, I don't want to pay the government, so I'm gonna put all this money in the house that I'm about to sell, so someone else is gonna get to enjoy all of that stuff. I'm not even gonna be the person to enjoy it. I'm like, no, I just want to sell the home and keep all my money that's in the home that I purchased. The government got their money in the form of the property taxes, or the county got their money in the form of the property taxes. But it's like, that's the government's money. You're gonna forever just tax the property itself, but the capital gains, no, that's mine. Like, that's mine to keep.
Unwise. It's unwise to spend a whole bunch of money in improving the home, just to try to save some money down the line, or because number one, you're not going to get it back as the seller.
Yeah.
You're never going to get back what you put into it. I think we want to build an in-ground pool, or we want to redo the kitchen, or we want to redo all these light fixtures. The thing is, if the buyer doesn't appreciate it, or it's not their taste or style, they're going to get rid of it anyway. And they're not going to offer you the value that you're expecting. So you have to be careful with those expenditures that you're spending to try to save.
Yeah.
Or to try to make money.
Yeah.
Do the bare minimum and get out of there.
It's different when you do it for a business, because a lot of people do spend money in their businesses to avoid paying, to have write-offs. But that money that you spend can grow your business to better position you to be even more dominant in your field, or make even more money the following year. It's like Amazon has avoided paying taxes so much. But there's a lot of reinvestment in the business, not just with them, but with a lot of businesses. It's like, oh, we're going to have to pay $5 million in taxes. Well, let's go invest $5 million in our company. And rather than giving that money to the government, we just pour it back into ourselves. And now it's a write-off, and we don't pay the government as much. We just spend that money on us and build our, business up. But when I'm doing it for a home, because you're only going to pay the capital gains tax when you sell. So if I spend the money to lessen the capital gains tax, the stuff that I'm spending the money on is, if it's, one, I'm not going to enjoy this stuff because I'm not going to be living there. But two, if it's stuff that's like increasing the property value of the home, because it can get really technical. So it's like, let's say you add the deck, like you're saying, or you add an addition, a bonus room. Does that increase the value of the property to where now that $500,000 property is worth $600,000? So now
usually not.
I mean, is how much did it cost for me to build the deck and the addition? And let's say it cost me, I don't know, $80,000 to build it, but that $80,000 spent adds $40,000 worth of value to the property.
That's about right.
Then now it's like, okay, so I spent 80 that I can reduce, but now that's another 40,000 extra that I added to the property that I will have to pay capital gains tax on. I don't know. I'm more of like, just get rid of it, or make it so outrageously high that it's really only gonna affect people that have 8 figures or more. In my opinion.
What are the new limits? They were proposing new limits. It would be 500,000 for individuals. Yeah. 500,000 for individuals and $1 million for joint filers. And then they would be adjusted upward annually to account for inflation. I like that.
As they should. Yeah, as they should. So, I mean, if I could have $500K in my pocket without having to give the government any of that, yeah, I'd be incentivized to, oh yeah, I can get rid of that property that, and let's have that extend to, all properties, not just primary residences. You extend that to investment properties as well. That would be nice. Because again, investors own a large percentage of the real estate out there. I mean, like a really large percentage. I mean, you just look at what happened in 2020, and we've mentioned it a whole bunch of times how investors came in and just bought thousands and tens of thousands of homes, and they're just locking them up right now. And imagine how many of those homes would be released if they could just be sold without having to pay the capital gains tax, because that's something that investors do factor into the cost at which, what they're going to get from when they sell it, what it's going to cost them. Obviously, whatever you contribute to the closing is going to cost you, but you're also looking at what is it going to cost me in, taxes. And if you can 86 the capital gains tax, maybe you have investors that are more willing to not only release some of those properties, but now that they're not getting taxed by the government, maybe it's like, you know what, I can afford to give a little bit more in seller concessions because I'm not having to give 40% or 25% or whatever the number is to the government.
Right.
I can afford to help the next buyer purchase this home. I just feel like it would be of a service, and maybe you make that a thing, where it's like, okay, you know what, you can forego the capital gains tax if you are contributing at least 4% of the value of the home to the buyer that's purchasing it or whatever. I don't know what the answer is. I'm just, throwing out ideas, but it's like, there are so many different ways I think that we could do this thing better than just, oh, you sell a home, government's going to take a huge chunk of everything, because now it's like, okay, well, I'm not going to sell it. I'm going to buy as much as I can. I'm going to hold on to it. I'm going to just borrow against it. So not only do I own the property, I can still get the money out, and I can use the interest that I'm paying as a tax write-off. I think there's a better way to do it.
Yeah, I agree.
Yeah. So anyways, I guess we'll see what ends up happening out of all of this. And yeah, to be determined.
Think positively. I'm going to think positive thoughts.
Yeah. I mean, it's not going to stop me from investing in real estate for sure. I'm a big proponent of real estate, owning it. And I mean, if I own it and the government's like, if you sell it, you're going to give us a whole bunch. Just guess what? Our country, the lawmakers, it's built on people who own real estate. So there's going to be a loophole. There's going to be a way around. There's going to be something where people who own it are going to be able to profit and capitalize on it, because landlords, real estate owners, that's who runs the country. So we'll see.
Yeah.
That's what we have. So yep. Make sure you tune in.
Short and sweet today, folks. Short and sweet.
But tune in on next Friday and Tuesday as well, 7 p.m. Going live, Home Finance Hacks episode dropping every Friday for Greatest Asset Community Podcast. So make sure you stay tuned. And until next time, take care, be blessed, and we'll see you next week.